Hello, friends. I'm Piyush and welcome to Nirmal, and today we are bringing to you an exclusive conversation where we are talking about creation of a new asset class on the exchanges. A REIT from Blackstone Group is coming up, and the uniqueness about this REIT is that it is based on shopping malls. We have seen other two REITs which were being brought earlier by the Blackstone Group, and those were largely based on office assets. And this is the first of its kind. With this REIT, you will be able to actually take an exposure straight into the shopping malls of the country. About 17 shopping malls, again, basically are placed in the REIT. And we are talking about a very good 3,200 crore size IPO. Now, let's understand more from the management. And let me now welcome Mr. Rajesh Deo, CFO of Nexus Select Mall Management Private Limited. Rajesh, welcome to the show.
Thank you, Piyush. Pleasure to be here.
And now let me highlight some numbers for our viewers before we start our discussion. We are talking about almost 17 operational shopping malls across 14 cities. We're talking about almost 10 million square feet area. With this rate, 3,000 stores or more. Again, basically in these shopping malls, a lot of brands, more than 1,000 brands, basically across the shopping malls. And you are talking about a landmark here. Uh, Both again from the perspective of creation of an asset class, and then also actually from the size perspective, more than a 3,000 crore IPO from a shopping mall perspective. Uh, Rajesh, how do you see? Are you actually sort of looking at this from a perspective of a very sort of huge foreign interest also taking interest in a very large consumer market and a very organized sort of way through a REIT?
Yeah, so Piyush, if you look at, we started this journey in 2016, and in just 7 years, we have created the largest mall platform through consistent acquisition. And that's because of our very high conviction on the India retail growth story. So if you look at the GDP, two-thirds of the GDP is consumption based for India, which kind of fuels the consumption story in India, and that is a conviction in terms of growing this portfolio.
Right, and from that perspective, help us understand from the perspective of both fresh issue and offer for sale shares, offer for sale, why actually about 1,800 crores is monetized? Is it like generating returns after holding the assets?
So if you look at the total size of 3,200, out of which 1,400 is primary, which is partly required to retire the shareholders' debt, which is required by the REIT regulations, and some amount of general corporate expenses, and then about 27 crores for acquiring some stake in Treasure Island Next Mall in Indore. So that's the primary part. And the secondary part, I think there are two, three parts. Select is the second largest shareholder, and at 25%, it's a deemed sponsor. So they are coming down a bit from 26 to about 25%, 24% slightly.
Okay, and from a treasure island perspective, when do you see the sort of transaction getting closed?
This is part of the formation transaction, Piyush.
Okay, sure. And help us also understand how has been the trend so far across the shopping malls and how basically a sort of overall ROI is coming through because we have seen a lot of buoyancy in the last 12 months.
Yeah. So, Piyush, COVID was again one of the black swan events where our malls were largely impacted, the worst impacted. But post COVID, what we have seen, the growth has been like amazing. So, we have grown, if you look at the 10 months that we have disclosed in the offer document, April to December, we have grown by about 28% over FY20 same period on the tenant sales. And whatever the if you and the point that the projections in the draft offer document was for 23, 24, and 25 financial years. Basis the 9 months ended 31st December, we were on track in terms of the projections also. And initially we thought this is one of kind of revenge shopping, first quarter, second quarter, but it continued to throughout the 4 quarters, and still the consumption and the demand is there in the shopping malls.
Right, and the trend is anywhere different between the geographies, north, south, or you are seeing a coherent trend.
So Piyush, our portfolio is hugely diversified. If you have seen I'm sure you've seen the offer document. We have malls about seven malls in the south, three in Bangalore out of them, north, one in Bhubaneswar, and couple of two malls in Pune and one in Bombay. So we have not seen any specific consumption trends basis the regions. What we have seen is because a company like us, whose 95% time goes into operating and managing malls, if you are managing malls well and operating it well, then there is footfall then which kind of converts into your consumption.
Right. And post COVID, actually, how actually has been the rental growth, and at present, what is sort of where we are in the cycle of rental growth?
Yeah. So Piyush, if you look at our portfolio, the way the leases are structured, it is designed to give stable cash flows with the ability to participate on the consumption mix outside. What it means is if my total rental income is 100, 87 comes from fixed rental and 13 is what is linked to your tenant sales, which we call revenue share. So I'll break this question into two parts. How has the occupancy gone up and how has the rental gone up? So occupancy, as of date, we are about 96% occupied. And what we projected in the draft offer document was about 94%. We are ahead of what we had projected in terms of occupancy. That's because there is a huge demand for grade A space. And if you look at the grade A malls, there are only 100 grade A malls in this country. So when I say grade A mall, it means a mall which is at least a 5 lakh square feet in size, GLA, having full blown experience like a cinema or funds and entertainment center and all the fashion brands that it has. Out of which 40 are owned by platforms like us, Phoenix, DLFs, and the balance 60 are owned by your individual developers. So the space there is a huge constraint in terms of space available, and people, the brands, if you look at last couple of years, 300 international brands have come. There is growth by Indian players, but there is hardly any space because all the grade A malls are occupied to the extent of 92 to 96, 97%. And that's the reason why there is demand. And the way our leases are placed, at least 10% of rentals comes up for expiry every year. So
Okay.
either we renegotiate with the existing tenant or bring in a new tenant. And when we do that, basis what we have achieved in the past, we achieve a spread of about 20 to 22%, which we call mark to market.
Right. And when I look at that, what is the sort of yield actually you're offering in this REIT?
So Piyush, this is the valuation, the cap valuation of one. So if you look at the GAV is about 23,500, you reduce your debt about 500. So NAV is about 19,500, and the valuation that has been agreed is about 15,150. At 15,150, the yield is about 8.25 compounded on a quarterly basis. And just to extend, two-third is about in a REIT, about two-third is tax-free. And if you look at 8.25 and the tax-free, the taxable post-tax yield is about 7.1%, which is about 115 bips over your 10-year GSEC or a 75 bips over any other REITs in existence in India.
I'm tempted to ask Rajesh, was this yield sort of planned looking at a long-term outlook, or there was also a discussion from the perspective that should we actually sort of give more offer on the table, like how it was being arrived?
This is all about demand and supply, Piyush. And I think the story, unlike, I'll just give you an example. Office, you can always assume office as a bond where there's a fixed yield and there's no play around it. Unlike in our business, there is a fixed component, but there are multiple levels of growth, organic growth, which is your mark to market, your revenue share. Plus, we have multiple streams of margins. So there's a rental income, there is a marketing income and a marketing expense which gives a positive margin. There is a CAM income and an expense which again gives a positive margin. So if you look at the net operating income and compare it to rental income, it is always 106, 107%. That's because we have multiple revenue channels which gives positive margins in this business.
A question on the marketing margins here for our viewers, because most of our viewers, they would not be understanding marketing margins. I'm very sure. Rental income is very easy to understand, but I think please just give a short answer on the marketing margins also.
So Piyush, it is nothing but your marketing income minus your marketing expenses. So we have signages on hire, which is this space on hire, which we give to tenants and people who want to put advertisement, and we earn revenue out of it. Out of that
Exactly.
revenue, we spend on marketing expenses. So that gives us a positive margin.
Right. So for our viewers, a shopping mall basically, as Rajesh is saying again, you're earning income by rental income. You also actually are earning income through how much actually the brands are actually able to sell. That's another part of the revenue share. Then you're also earning through advertisements, which again is being referred to marketing. So there are numerous ways again which a shopping mall is able to earn. Apart from that, what is sort of a plan looking like? Any sort of plans for acquisitions? Is 2023 looking another year for acquisitions, or are you looking in a consolidation mode? What's the overall strategy?
So Piyush, if you look at history, we have been acquiring about an average of 1.4 million square feet every year. It can get lumpy some point in time, like we acquired 7 malls from Prestige down south in the mid of COVID. But on an average, we have been acquiring 1.4 million. So what we have put in the offer document is all organic growth. And post filing of our draft offer document, in fact, we have been receiving inbounds from developers on the possibility of them rolling into the REIT in exchange of units. And that has two reasons. Reason one is REIT as an instrument is lucrative from a seller's perspective. And that is why Select City Walk, which is the best performing mall in the country, is rolling into the REIT in exchange of unit. Because that transaction of converting the physical asset into a financial asset in exchange of unit is completely tax free, tax exempt. And then what happens to the seller is he rolls into the REIT where the transaction is tax free, and the dividend, the distribution that he gets, about two-thirds is again tax free. So it is a win-win situation for the seller and the buyer in terms of the REIT. So what we think, basis that we are in discussion with a couple of developers because we have not signed anything, we've not been able to disclose. But the plan is to kind of double this portfolio in the next 5-6 years.
Right. And the easier way will be actually to sort of buy them out or actually exchange for the REIT units, as we were just explaining from the
Yeah.
perspective of tax
So
efficiency.
Piyush, we have the flexibility of either acquiring through exchange of units or paying the cash in the consideration in cash. Because if you look at our balance sheet is very lowly levered. We will be at about below 20% loan to value on listing, and Indian REITs are at a level of about 25 to 28%. So we will have significant headroom to keep on acquiring assets through the debt mode.
Okay, Rajesh, I think that is something which our viewers will take home. An interesting asset class is opening up on the shopping malls. Consumption, if our viewers again love consumption, then this is a straight sort of play. And a sort of asset class where actually is going to present long-term growth, because acquisition opportunities will keep coming in leaps and bounds. So from our side, Rajesh, all the best to you for this issue and for creating a landmark in itself.
Thank you, Piyush, and thank you for inviting me to your show. Thank you so much.
And viewers, with that, it's a wrap on the show. Hope you enjoyed it.
Subscribe to our YouTube channel and click on the bell icon to never miss an update from Nirmal Bang.